Hello, I'm Peter Towers, Managing Director of ESS BizTools and ESS BizGrants. Welcome to this members webinar, Grants to Assist in Difficult Times. And we're sure having some difficult times, aren't we? We've got COVID-19, coronavirus. We've had droughts, bushfires, floods and cyclones in northwest Queensland, and then along comes coronavirus that just seemed to be the final straw for a lot of people. So I thought I'd run through with you on some of the grants that are available, just to give you a reminder that they're there, and all of this materials within ESS BizTools. And what I'm showing you here today is the paper numbers within our system, so that you can go on and look at what's available for you to talk to your clients about. These grants are grants that employers must apply to be able to participate in. So we've got the apprentices and trainees must be employed at 1 March 2020. The businesses must have 20 full-time employees to be able to access this grant or subsidy. The subsidy period is 1 January 2020 to the 30th of September. The subsidy that's available under the JobKeeper program is a subsidy of up to 50% of the apprentices or trainees' wages for that 9-month period. The maximum subsidy for that period is $21,000. So it's a maximum of $7,000 for each quarter, and there's 3 quarters in the year. Now you can lodge your application now, or your clients can be lodging their application now. This is paid 3 months in arrears. So the first 3 months, January, February, March, are now being paid, subject to your client submitting the application form. And those applications were available from the 3rd of April. The coronavirus supplement is available to some business people. It's a temporary eligibility to the income support payments. The payment is $550 per fortnight, so that's the supplement, the extra payment. And the eligibility includes sole traders and self-employed persons. Now, the conditions are, if after the 1st of January 2020, the business was suspended, unable to do work, or has had a reduction in turnover of 20% or more, the businesses must apply for this subsidy. It's not just going to be automatically processed by the taxation office, but it's available, and some of your clients might find this of benefit for them, and hopefully they've already registered. They can also, because they have qualified for the coronavirus supplement, they are eligible, if they wish, to make an application to withdraw up to $10,000 from their superannuation funds prior to the 30th of June 2020, and they could draw out a further amount of up to $10,000 in the period 1 July to 30 September 2020 if they wish. Applications must be lodged. And then we come to the big one, the JobKeeper payment scheme, which is very much in fashion at present. Businesses must apply. It relates to employees that the business was engaging at the 1st of March 2020. It automatically applies to full-time and part-time employees who were there on the 1st of March that you are still employing or your clients are employing. And it applies to casual workers if they were engaged as a casual worker at the 1st of March and had had a history of being engaged by your client's business for the 12 months prior to 1 March 2020. There's a number of categories to apply for the JobKeeper payment scheme. The one that's going to affect most of our viewers, I'm sure, is for businesses with turnovers of less than $1 billion per annum. And if those businesses have had a reduction in turnover of 30% when compared to a period in 2019, as compared to 2020, they're able to claim eligibility. They only have to do it once, and the months that it can be compared to is the month of March or the month of April 2019 compared to 2020, or the 3 months, April, May, June 2019, with the same 3 months in 2020. If there is a reduction of 30%, your client is able to proceed with the application. So the business has got to confirm that there's been a drop in turnover of 30%. And they're the periods that I've just said to you. I got ahead of myself, my apologies. And this has got nothing to do with how your client lodges their business activity statements, whether they're lodged quarterly or monthly. There was some suggestion, I'm sure, because I read it somewhere when all this was first released, but that's now been clarified. You can sit down and do the calculations and get it into monthly, even though your business activity statements or your clients might have been lodged quarterly. It's based on the GST turnover. You do not have to keep on testing each month, but your client is required to lodge a declaration each month which identifies the number of employees that the JobKeeper payment is being paid to, and also your client has to disclose the amount of income for that month that's just gone. Now, the government claims that the tax office are not doing any subsequent reviews on the eligibility of a business to be able to claim the JobKeeper payment based on the declaration of the turnover. They are using it for statistical purposes to advise the government of what is happening to the turnovers of all of the businesses that are receiving the JobKeeper payments. I hope the Commissioner and the Treasurer are all on the same wavelength on that. So that's the JobKeeper payment scheme. I've just said that. It's also allowing business participation entitlement for some business people. And they don't have to be getting paid a salary. So sole traders can register for the JobKeeper payment if their turnover has reduced by 30% in one of those 2 months or that 3 monthly period. One partner in a partnership who's not an employee can qualify for the JobKeeper payment. One director of a company who's not an employee may qualify for the payment. And one beneficiary of a trust who is not an employee of the trust may qualify for the payment. Now, there is a rule against double dipping, so that if a partner, a beneficiary, a sole trader, or a director is nominated, they can't be also being nominated for the JobKeeper payment with another employer. They have to sign a declaration that they've only completed one JobKeeper registration form with one employer. These payments are going to be made monthly in arrears. So the first payment commenced from 1 March and the first payment by the tax office will be made in the first week of May. Now, there's been some changes in the last week. The registration date for the JobKeeper payment scheme was originally, the deadline was 30 April. That's now been extended to 31 May. And the tax office have announced that you can make the payments that relate to wages for the month of April up to the 8th of May to be able to get reimbursed during May. So that's some fine tuning that's occurred on this scheme. And from there on, the payments will be paid monthly in arrears. And I've just basically told you that. The JobKeeper payment scheme is on the basis that all of the employees who were there on the 1st of March, who have signed on to participate in the JobKeeper scheme, must be paid at least $1,500 per fortnight, even if their current wage was only, say, $1,000 per fortnight. You've got to pay them $1,500 per fortnight. And I've already told you that. First week of May. So those payments should be getting made very soon. So that's the JobKeeper payment scheme. There's been some fine tuning by the government over the last few days. Originally, the documentation indicated that people as young as 16 could apply for the JobKeeper payment. The taxation office has now changed that, and or the government's now changed it, I should say, and it indicates that if a claimant is 17 years or younger who is not financially independent will not be able to participate in the JobKeeper scheme from now on, but that adjustment is prospective, which means that if an employer has already paid the $1,500 per fortnight, they will be able to claim for reimbursement of that, but there can be no more payments unless that person aged 17 years or younger is financially independent, in which case they can continue. How much scrutiny an employer has to do to make sure that an employee 17 years or younger is financially independent, I don't know at this stage, but I'd suggest the employer needs to get some sort of documentation from the employee to substantiate that. So let's move on. Research and development's the next area I want to go to, because there's been some adjustments to the research and development scheme because of COVID-19 coronavirus. The first thing applies to the registration date. As you will know, the system at present is that a company must register with Oz Industry within 10 months of the end of a financial year to participate in being able to claim research and development as a R&D rebate item in respect of the previous financial year. So what that means is the financial year that ended on the 30th of June 2019, normally your client would have had to register with Oz Industry by the 30th of April 2020. A couple of weeks ago, the tax office and Oz Industry extended that date from the 30th of April to the 30th of September for this year only. The other concept built around research and development is the advance and overseas findings. This is where you can get prior approval for an R&D budget from the tax office and Oz Industry that they're going to accept it, or if you need to undertake part of the research project overseas, you can apply for approval for that work, and that's called an overseas finding. Normally, those applications have to be lodged by the 30th of June for the year ended 30th of June, in this case 2020. The tax office and Oz Industry are now saying, as long as you supply some basic information, or your client supplies the basic information, by 30 June 2020, and then supplies the full application for the advanced finding or the overseas finding by the 30th of September 2020, that will be acceptable for this year. So hopefully that helps. The minimum details you have to do for that finding and overseas finding is the company contact details and a description of the R&D activities. And remember, if your client's got 6 or 7 projects underway, well, they have to supply details of that 6 or 7 projects, not just one. But companies can still utilize the 30th of April 2020 date if they wish, or the 30th of June 2020. Let's look at state and territory governments, what they've been doing. Well, they haven't been inactive during this whole period. Obviously, the amount of money that they can supply is dwarfed by the federal government, but each of the state and territory governments have now released various grants and loan programs because of COVID-19. They've already got a wide range of programs because of the natural disasters that we had earlier in 2019-20. Wow, what a year this has been. Unfortunately, some of the people that got caught in the droughts, bushfires and floods are also being caught up in the problems with COVID-19 coronavirus. And our sympathies go out to them. Within ESS BizTools, we do have details of the state and territory government grants for COVID-19, the ones that we can locate anyhow. Some of these seem to be a little bit secret, but they're there. So please have a look for them and utilize the ESS BizGrants processing system to get that accurately. The disaster grants are primarily targeted at farmers and primary producers and small businesses with less than 20 employees who are located in a declared disaster area. Remember, a declared disaster declaration has to be made by the responsible state or territory government minister that is a declared disaster area, and that's when those grants come into operation. There's drought assistance concessional loan schemes all around Australia. There's drought relief assistance schemes for primary producers. There's natural disaster assistance. Everyone has their own chop at creating names for these things. There's natural disaster assistance small business loans. There's drought relief from electricity charges. There's special disaster assistance recovery grants, exceptional circumstances. And there's natural disaster assistance small business loans. There's drought relief from electricity charges. There's special disaster assistance exceptional circumstances. So there's a few of these. Disaster assistance loans, essential working capital for primary producers, basically the same thing for small businesses. Small business disaster recovery grants. And there's restocking, replanting and on-farm infrastructure grants. There's special disaster assistance recovery grants for cyclones, and there's emergency bushfire response in primary industries. So there's a whole range of grants that are available. They're all summarized within ESS BizTools and ESS BizGrants. As subscribers, please use the system so that you can be giving your clients an outstanding service of helping them through these very, very difficult times that Australia is suffering at present with the rest of the world. But we might believe that we're a little bit special because we had the drought, the bushfires, floods, and a little bit of cyclone activity in northwest Western Australia before then, and then along come COVID-19 coronavirus. We hope that this assists you to be able to offer an outstanding service to your clients, of keeping them informed, helping them with completion of the various applications. Some of them require a fair bit of information, especially grants being administered by state and territory bureaucracies, I notice. In the main, they're going to be looking for business plans or abridged business plans, budgets and cash flow forecasts, current financial accounts, and a real vision, which should be contained in the business plan of where this business is going and what it wants to achieve. So good luck with all that. If you've got any questions on any aspect of grants, please send me an email, peter@essbiztools.com.au, and we'll get back to you. Thank you for your support of ESS BizTools and ESS BizGrants. Don't forget to contact us if you do have any questions or anything that we can assist you on. If you come across a grant you don't think we've got in the system, please contact us and we'll have a look at it and write it up. Or if you can think of anything else that we should be writing on relative to business matters. At this stage, we've been spending a fair bit of time on the COVID-19 coronavirus built within survival in difficult times. And we're about to start embarking on a fresh start approach to when we are able to explode out of this COVID-19 coronavirus enclosure, which I'm sure we all feel. And some of you who are not used to working from home or who haven't got some dedicated facilities in your home, I have some sympathy for you. Working on the end of dining room tables with your children there as well, doing their home school activities must be extremely difficult. I work from home, but I'm in a 2-story house and our office is downstairs. It's a big area and we're able to have separate work areas, which makes life a little bit more tolerable. In fact, in our situation, very tolerable. Have a great day, and I'll talk to you again in the month of May when we're presenting our next members webinar updates on a topical issue to help you utilize ESS BizTools and ESS BizGrants to a greater advantage within your accounting firm. Goodbye. And I hope you have a great day.